For the longest time, the story of how India shops felt, well, pretty straightforward, right? It was all about the big, shiny supermarket pushing out the little neighborhood Kirana store. But let me tell you, that story is completely out of date. Today, there's a wild, complicated war being fought for your money, and the battlefield? It looks nothing like anyone predicted. So we're going to dive into this great Indian retail war and figure out who's actually winning, who's falling behind, and most importantly, what it means for you and your shopping cart.
All right, so here's how we're going to break it all down. First, we'll look back at the old retail order. Then we'll jump into the new three-way battle that's happening right now. After that, we'll tackle the quick commerce revolution, the whole 10-minute delivery thing. Then we'll see how the incumbents are striking back. And finally, we'll gaze into our crystal ball and talk about the future of your cart. Let's do this.
And really, it all boils down to this one single question. Who is winning the war for your wallet? We're talking about a market that's going to be worth over $2 trillion soon. Hundreds of millions of shoppers. The stakes are just massive. So, who's really coming out on top?
Okay, so to really get what's happening today, we gotta rewind a bit. The first big retail battle in India, it was a total classic. Like something straight out of a business textbook. The story of the hare versus the tortoise.
So, picture this. In one corner, you've got Big Bazaar. They're the hare. They launch in 2001 and just take off like a rocket. By 2011, boom, they're everywhere. 250 stores. It felt like they were on every corner. But then, in the other corner, you have DMart, our tortoise. They start just a year later, but take a completely different approach. After a whole decade, they had only 10 stores. Just 10. They were laser-focused on getting their model absolutely perfect before they even thought about hitting the gas.
And this right here really shows you how differently they thought about, everything. Big Bazaar was all about moving fast. They leased their stores, which meant they could open new ones super quickly. They were aggressive, always expanding, and had this huge variety of stuff with big flashy sales. DMart, the total opposite. They were all about control. They owned their properties, which is a huge upfront cost. They expanded slowly, methodically, and instead of a million different things, they focused on a smaller set of high-demand groceries, promising an everyday low price. It was slow and steady, sure, but that patient, asset-heavy model ended up building a business that was just way more solid and ultimately way more profitable.
All right, now let's hit fast forward to today. That simple two-player race between the hare and the tortoise, it's ancient history. Thanks to smartphones, new habits, and just a fire hose of venture capital money, the market didn't just change, it shattered. It's completely fractured. We're not talking about big stores versus small stores anymore. Nope, it's a brand new three-way battle for what we can call the different missions in your shopping life.
Just think about how you shop, right? There's the big monthly stock-up run. Loading up the cart. That's still the kingdom of hypermarkets like DMart. But what about the midweek top-up when you suddenly realize you're out of milk? Or that late-night impulse craving for ice cream? That entire space has been totally taken over by quick commerce. And then for the daily fill-in, grabbing a few essentials, the good old local Kirana store, now supercharged with tech, is still the king of that hill.
And this chart, it lays out exactly who each of these players is going after. You've got what we call the consumer class, about 120 million people. For them, time is literally money. They're the ones ordering those top-ups and impulse buys on apps like Blinkit and Zepto. Then there's the huge aspiring class, maybe 400 million strong. They're super value conscious, so they're the bread and butter for the big stock-up trip to DMart. And finally, you have the massive mass market. We're talking 900 million people who still depend on their local Kirana for those daily fill-in purchases. Okay, so let's talk about the elephant in the room. The biggest disruptor of them all, quick commerce. These guys didn't just show up to the party. They kicked down the door and completely rewrote the rules on speed, convenience, and how to even make money in this business. Let's just start with this one number from Blinkit, because it's kind of mind-blowing. 137%. That's the year-on-year growth in their gross order value, which is just a fancy way of saying the total value of everything people bought on their app. This isn't just growth. This is an absolute explosion that's shaking the whole market.
But look, a ton of orders is one thing. The big question has always been, but are they actually making any real money? Well, check this out. Their adjusted revenue, the actual cash they're making from those sales, shot up by a staggering 756%. This proves they're not just shuffling boxes around, they are building a real, honest-to-God revenue-generating machine. And now for what might be the most important number of the three. For years, everyone said quick commerce was just a crazy, cash-burning experiment that would never ever make a profit. Well, in that same quarter, Blinkit's adjusted EBITDA loss was just 5 crore rupees. That's basically nothing. They are right on the edge of being profitable. And the takeaway here is huge. The whole 10-minute delivery thing, it's not a fad. It's a real, and it looks like, a sustainable business model.
Of course, Blinkit isn't the only one in the ring. You've got their big rival, Zepto, which also posted insane revenue growth of 150%. But, and this is a big but, this shows you the razor's edge they're all walking on. To get that growth, Zepto was spending about 1 rupee and 29 paise for every 1 rupee it earned. And that just perfectly captures the crazy, high-stakes nature of this war. You can grow like a weed, but man, it's going to cost you a fortune.
So, with all this chaos and disruption from the new guys, what about the old guard? How are the big, established giants, our tortoises, fighting back? Are they figuring it out, or are they just getting steamrolled?
This chart for DMart tells a fascinating story. At a glance, things look okay, right? Revenue is up a pretty decent 15.4%. But look closer. Their net profit growth is just 3.8%. That growing gap between sales and profit? That's a huge red flag. It's a classic sign of a business feeling the squeeze. They're selling more stuff, but the competition is forcing their prices down, and it's getting harder and harder to actually make money from those sales.
And here's exactly where you see that squeeze in action. Their EBITDA margin, which is basically a measure of how profitable their core business is, it's shrinking. Now, a drop from 7.6% to 7.3% might not sound like a lot. But for a giant company like DMart, that tiny little fraction of a percent means crores and crores of lost profit. And pretty much every analyst out there is saying the same thing. This is a direct hit from quick commerce competition.
But hold on, what about the third player in this fight? The humble Kirana store. Everyone thought they'd be extinct by now, right? Well, this quote just nails it. The Kirana is far from obsolete. Instead of dying out, it's actually getting stronger, thanks to a quiet digital revolution that's helping them manage everything from inventory to payments like never before. And that silent digital revolution arming the Kiranas? That's really just a preview of what's coming next. As we look ahead, it's becoming super clear that the next round of this retail war won't be about who has the biggest stores. It's going to be fought with code, with data, and with some seriously powerful tech like open networks and AI.
Probably one of the biggest potential game changers out there is something called ONDC. Honestly, the best way to think about it is UPI for e-commerce. Remember how UPI lets you send money from any bank to any bank using any app? It broke the power of the big wallet companies. Well, ONDC wants to do the exact same thing for retail. It's an open network that could let your local Kirana sell its products on any app without having to pay a huge cut to a big aggregator. This could seriously level the playing field and democratize the whole system.
Then there's this idea of Phygital convergence, which is just a fancy term for the blending of physical and digital stores. Here's a perfect example of what that means. Imagine a massive DMart store. Instead of just being a place where you go to shop, it also acts as a giant mother hub. It uses its massive buying power and supply chain to keep a whole network of small, local dark stores stocked up. And those dark stores? They exist only to fulfill 10-minute delivery orders. It's a really smart way for the big guys to use what they're already good at to play in the super fast delivery game.
And of course, we have to talk about AI. It's finally moving beyond just being a buzzword and becoming a real weapon in this war. Let me give you 3 quick examples. 1, it's making shopping way smarter. Blinkit has a feature that uses AI to create a whole shopping list for you if you just type in, "I want to make pasta tonight." 2, it's creating brand new ways to make money. Zepto is packaging up all its hyperlocal data and selling those insights to big brands. And 3, it's making life easier for partners. Reliance and Meta have built AI tools that let Kirana owners reorder stock just by speaking into their phone in their local language. It's pretty amazing stuff.
So, what's the big takeaway from all this? It's that the battleground has fundamentally shifted. The fight for your money is no longer happening in the store aisle or about who has the best real estate. The real war, the one that matters now, is being fought inside the algorithm. So the final question isn't who will build the next great store, but who will write the code that wins your cart.